Oh boy, do we have a lot to talk about. I mean, this video was supposed to be for tomorrow, but I can't wait to tell you everything I have here. It is Friday afternoon. I'm going to get it ready, post it a little bit later this evening. But yeah, lots to talk about, guys. I mean, what a week. Anyway, I am your host, The Cowboy. This is Elliott Wave Cafe. Macro, episode 22. Let's get started. Alright, here is what I have for you for tonight. I mean, it's exciting. Very, very exciting. What a close in the S&P 500. I mean, I tell you, man, last week it was bad. They were about to break lower. Everybody was bearish. It was kind of crazy. I'm going to talk a little smack today here because I feel very, very good. But let's take a look at these. So S&P 500 is ripping. Bears are biting their nails. How about that? Dollar needs more oxygen. What does that mean? ARK is very strong still. Talking markets a little bit up there in the Elliott Wave Cafe Pro Room. Crypto total market cap. Let's take a look at that and see what happens up there. And then three charts you got to see. You can't miss those. It's Elliott Wave. It's counts. It's pretty cool stuff that I think you're going to like. So anyway, let's get going, guys. But you can find me on Twitter, Elliott Cafe. 800 followers today. Thank you, everybody. This is awesome. Come visit, talk, present charts, reply. Thumbs down, thumbs up, doesn't matter. Let's get this discussion going. I like it. There is a lot of kind of back and forth, so it's super awesome to have you on Twitter. All right, right here. That's my little whatever you call that, right? The name. Okay, let's go. Before, this is where you can find me. This is the Pro Room right there. We discuss every single day macro assets. We discuss Bitcoin. We discuss altcoins. I'm there all day long in the chat room, talking stuff, presenting, doing updates, videos every single day on Bitcoin, on macro, stuff like that. So give it a try. This is the link, or don't. All right, let's begin with the S&P 500. Here's the thing. Last week, we've talked about the big trend in the S&P 500, all right? This is this one. 2008, 2009, 2022. Corrections along the way. I kept the chart as it is. I was talking about these little circles. That's the pullback after the rally. As one thing to pay attention to, because when things kind of get a little bit out of hand and people get a little bit more too bearish, right? Things can change up there. The narrative can change. So, today and the whole week, pretty much, we have got a pretty decent rally up in here. So you can look, right, we were at about 39.24, pretty bearish close last week. We've closed on a bullish engulfing this week at 40,067. Maybe we went even a little bit higher. So, very nice reaction this week. We'll see what's going to happen. But we are in the secular bull market with little cyclical bear markets in here. We continue to look higher. I think this market is very powerful and it's got a lot of ingredients and stuff underneath it that's probably going to propel it to new all-time highs. So I'm not that bearish. I try to respect the trend here. We're getting bounces from these middle lines. Now if we break below those lows, things can change, right? We can get back towards 3,000 in the S&P, 3,200. That's what I said last time. But until then, I think it warrants kind of paying attention a little bit to the other side. I think that's very important to watch. So very nice reaction, very nice strong close in here. I just kind of zoomed into the price section so far. So don't forget to take a look at the longer time frame. And if you're telling me this is a bear market, I have no words for you. I don't know. I mean, this looks like a pretty big bull market. No matter however you want to spin this chart, turn it upside down, put it backwards, sideways, whatever. This is a bullish market. It's right there. From the lower left to the upper right. Hopefully I don't annoy some of you, but that's what it is. All right, let's take a look at the S&P 500 on the 6-hour chart. WXY, correction, ABCX, ABC, completed at 36.24. Big 20% rally up into the trend line. So, bears continue to have the upper hand. Why? Because we haven't taken up this high. We have destroyed this downtrend, right? Because we took off this B wave, and instead of continuing to make lower lows and lower highs, we started to make, higher highs and higher lows. This is a higher low right there. That's higher than this one. Until this one gets taken out, you are still in a series of higher highs and higher lows on this trend. This trend line here is very important. Now, The problem that we have here is we don't have a pretty clean impulsive wave from these lows to these highs, right? It looks like you have an impulse, you got a correction, and then you got an impulse. A lot of people in the LA wave community looking at this as an ABC. If it's an ABC against this trend, that means that it's either, you know, a wave B and this whole thing was a wave A and that's a B and coming down, or this was a wave 1 and that's a 2 and you're coming down, or this whole thing was a W, you know, or was WXY and then you got another X and then you got the next leg lower. So this is what the bears are drilling for, right? That's what they would like to happen. Now, the problem with that is that I think we had too many bears, way too many bears. The level of bearishness that was as the market was breaking below this trend line and it was kind of hovering into the support was extreme. Again, just like not as bad as it was back here, but it was pretty damn close. And I'm going to show you some charts on there. And that's the problem. When you have too many people looking at the bearish side, when you got too many put buying, when you have, you know, all these indicators showing you, oh my goodness, you know, you have institutions, again, buying puts like crazy and trying to protect. And I don't know, that's when you have to look to the other side of the market. You don't have to be afraid of that, right? This is what happens. There's stuff when things get too extreme and then, you know, the market rallies on the other side. Now, will they have enough power to continue to push higher? Is this an ABC? I'm not sure, but I presented the chart last time, which shows that this could be a 1, a 2, a 3, a 4, and a 5. And you can get a leading diagonal out of these lows, and then you can continue to climb higher. So do not dismiss that. Just because it's a little bit more awkward, it's very possible that that's what that could be one of the ways that this market could unfold. Okay, so you can hear it in my voice. I'm a little bit excited about this rally because you've kind of taken out this trend line. You got this trend line, this one, you know, you're pushing in there, right? Now, into the next week, I'm not expecting this to continue like, you know, out of the blue and just kind of rip to the upside. We're going to get some pullbacks, you know, and those are probably going to be buyable pullbacks because if this is a pretty good impulse, then you're going to get a B wave in here or maybe a wave 2 and then another rally higher. Right, towards the end of the next week. We have inflation data coming next week. That's on the 13th. Then we have the Fed. This market we had this week we had a bunch of interesting news in terms of economic data. We had European Central Bank that came up and raised interest rates 75 basis points. We have a bunch of fiscal stimulus packages from England, and we have things happening in Europe regarding the reserves with the natural gas, and things are starting to look a little bit better over there in terms of this winter. So market was caught a little bit wrong-footed into this sell-off back in here, and we snapped back up higher. Now this rally, it's pretty strong because it's got a lot of breadth and it's got a lot of, it's not just, let's say, a little bit of energy rallying and a little bit of materials or industrials, right? I think there's a lot of weight behind this rally. We'll see if it's going to fail or not, but I saw a lot of participation in here. So I do think that this is probably going to continue in here, okay? But until we're breaking above this X wave right there, right? Until we're breaking above there, we got to be careful and we got to be cautious. So I'm always going to say that. I'm not just going to say, okay, fine, we're ripping to new all-time highs. But things are starting to show you that they're holding in here. So we'll see what's going to happen. But if you start to break again below these levels, things can start to look uglier. And if you break below 36.24, then you're looking at this A wave to continue in here. And then you get a B and a C. So, I'm not making the rules in the market. It will do whatever it wants, however it wants to do it. All right. I just want to position when situations are extreme. If I notice that this is extreme, I'm going to take the other side of it, right? If I notice that this is hitting the trend line, I'm going to be prepared for it because I talked to the members in the room and I said, listen, we're coming up here into these levels and just kind of be cautious and things can turn from here. I did not expect them to turn so fast, but that's where we are. Again, this rally in here, maybe a little bit overdone. We're going to see if we're going to get a pullback. So anyway, you can see the RSI in here also climbing back above 50. We wanted to get back above it a little bit more to continue to rally. But usually, when you come from the lows, when you get near 50 or 60 in the RSI, you can get pushed back the other way a little bit. So into next week, just kind of cautious and just wait for a little bit of a setback. And then maybe we can trade something again after a pullback back to the upside. So that's what's happening here. Now, listen, I'm not talking just because, you know, I feel bullish or whatnot. But here's the data. All right. This is the AAI bulls. People were very bearish again. And this thing comes on, I don't know, every Wednesday or something like that. So it came on this week and look at the reading, minus 53.30. Okay, versus the bulls, which is 18.10. The spread between these two is minus 35.20. People are still bearish. But you guess what? Look at this. It's diverging a little bit, right? So you're bearish, but maybe not as much anymore, right? In terms of this American Association of Individual Investors. Every time you get a bit of a sell-off, they're dipping back. But every dip in here, it's a little bit higher than the other one. Now, we've been in a pretty big depressing. I mean, look, we barely had one black bar in here. This wasn't this rally. Nothing yet so far, right? So still a pretty heavy sentiment on this market that you're going to crash, that this is the end of the world, that, you know, I don't know, it's the next 2008, it's the next 2000. And guys, we've been in a bear market since 2001 in the spring. A lot of stocks had got completely demolished. What else is left? What else is left to be demolished out there? I mean, you tell me in the comments, what else is there? Well, you want Apple to crash? You want Nvidia to crash? It's crashed already. What else you want? Amazon, Google, the big guys, like, you know, they took them all and they cleaned them all since the beginning of the year. And some of them started way earlier than that. So I don't know. I don't know what's behind this bearishness, but I'm curious to hear that. Going next, look at this. This is the McClellan oscillator. It's a market breadth indicator. Difference between the number of advancing and declining issues. Okay? Look at this one. Every time you come back towards below 100 in it, right there, you're getting huge rallies in the market. I mean, just look at them. You know, every time this happened, this one, back up, this one, back up. Like, you can just line every single line in there, and you will see these are extreme levels in the McClellan oscillator, you know, and this is stuff that I look at. You know, I'm not just looking at Elliott wave and just say, man, you know, this wave and that wave and stuff. No, the market has a story, and we got to understand that story. We got to look at it and look at some of these breadth indicators, look at some of these internals of the market, what's going on in this, you know, inside the market, you know, how the heart is beating, what's the plumbing doing, what's going on in there, and things like that. This will show you that the markets get a little bit extreme. So we take the other side of it for a little while, and then we'll see what happens next, right? But just a little bit of a clue, you know. Now listen, when you go too bullish towards 100, maybe it's time to take a pause and say, I don't know, maybe they're a little bit extended up here. So that's kind of how we read the market. We got to take a look at the inside of the market. This is another one. I mean, this is the bullish percent index. You know, it's an awesome indicator. I don't know, maybe not a lot of people use it, but you know, I have it running in the background and I verify it every single day, and I look at it. I'm like, where is it? Is it above this red line? People are a bit too bullish. It's below the green line. People are getting too bearish, right? You're going up, you're coming back towards the middle line. In the 50, usually there is a pretty good support right there, right, in it. So now what? You're getting a bit of a bounce. If you continue and you hold back in here, you know, that's a good thing. If you're breaking below, that's not as good. So this is a bullish percent index. It's based on the, you know, point and figure charts, signals right there, right? So it's usually considered overbought when it's above 70, oversold when it's below 30. And these are, again, just a bunch of breadth indicators, sentiment indicators, what's going on underneath the surface. So I usually watch this to see if they align, if there is any divergences in there. So, you know, go ahead and use them. I mean, they're pretty awesome. And you know, here's another one. This is new highs versus new lows. Okay, it's just simple and basic. How many things are going up versus how many things are going down? How many new highs are you making? How many new 52-week highs are making? How many new 52-week lows you're making? Look at this indicator right here. Look at the next one. Look at this one. Look at this one. Do you see how we're going higher and higher? What is this telling you? This is telling you that there's less and less issues that are making new lows in this market. Less and less of them. And that there was a big capitulation right here. I mean, look at the difference. Minus 650, minus 450 in here. You had this big flush in the COVID crash. But if we spend a huge amount of time in this gray area, imagine when you go back to this, right? When you're starting to go and you start to get into this color up there. And they will tell you again, I mean, look at this. as it was coming down, less issues were making new all-time highs or new 52-week highs. And more of them were starting to make, new lows, or even if they weren't making them, right, less and less of them. And that would tell you that the market is about to kind of look the other way. So it works the same way on the other side. So again, new highs versus new lows. Very important to watch it. Here we are climbing back up higher. We got to see a little bit of this. Not yet, but it's less and less of them making a low. So again, I'm just showing you data. Okay, I'm not pulling this thing out of anywhere. This is what's up there on the market. I mean, you can get it. You go to stockchart.com and you just get it. So anyway, this is that. Now, this is the S&P 500. Now let's take a look at another one. Look at the ratio between XLY and XLP, discretionary versus staples. And you're looking at this thing, sell off, and what is this indicator doing? Barely budging, man. You know what I'm saying? My dudes, look, barely budging, because there is strength in the XLY versus XLP. People are not buying as much consumer staples anymore. Otherwise, you would have seen a huge run in this ratio to the downside as the market was crashing, and you would have seen this XLP, outperform XLY. No, they just basically had a little bit of a blip, and it continues to push higher. And back in here, it was showing you that it stopped selling lower. You were making this low and then this low, and this ratio was flat. Underneath the surface, people are starting to buy, more discretionary items, more technology. Even if you get into a recession, it doesn't matter. That's the stuff you buy when you start to get into a recession, because you're moving it to the next cycle. And then they're anticipating Fed to pause, they're anticipating easing, and people are starting to position ahead of that, with maybe 12 months. So anyway, it's another one that I, pretty much watch very, very closely. So I just wanted to show you this. I might get some hate, I might get some good comments, I have no idea, but let me know what you think about this. I mean, guys, this is just pretty simple and basic stuff. It's what's going on underneath the surface in the market. And listen, I love Elliott Wave, I do, and it's kind of my main thing, but you got to combine that with some of this other stuff that happens underneath. All right, let's talk a little bit about the dollar, because the dollar is another one that's annoying me to no end. There is just, this thing is, I mean, it's been just climbing, right? So I have no issue with it. I mean, it's been climbing, and it's been strong, and it's been killing everything. It's been killing Bitcoin, it's been killing emerging markets, it's been killing growth, it's been killing, who would have thought that this thing is going to move from 90 to 100? If you caught this move, I mean, kudos to you. You're the best. Okay, but I didn't. I didn't expect this thing to climb so high. But I'm also aware now that, listen, this thing is running out of oxygen. When you climb the mountains and you need more bottles, and then you're starting to, it looks like it's starting to suffocate a little bit in here. I mean, the RSI is dropping. You got this guy right there, this high. Look at the RSI here, right? I don't know. To me, you're still in an uptrend. You're making higher highs and higher lows. I mean, until this low right here at 105 gets taken out, you're still in a pretty decent uptrend. Okay, but there is signs in here that things are starting to look a little murky for the dollar, and we've gotten a little bit of a taste of this week. Now, if European Central Bank raises interest rates, I mean, they went from 0 to 75, so they got a 75 basis point. Now, if they're going to do another 75 and Fed pauses in the meantime, that interest rate differential, right, is going to start to tighten. So that's in the favor of the euro. If for whatever reason they're able to figure out this winter without getting too much damage, right? If their governments are doing stimulus, if whatever, these guys are going to figure things out, man. They're not going to let their population go crazy. They're going to give them money. Listen, this is not their first rodeo. I mean, it's been the Greece crisis, they had the Italian, the Spain. They've been through a lot of stuff before. And I tell you, when they don't like stuff, they will change the rules. Okay? And all these speculators are going to get killed. So just be very, very cautious, because, you can fight this. I mean, you can, this is, I'm not a conspiracy theorist or anything like that, but I just know that things probably happen in the background we don't even know, and then they come up with these announcements, and BOJ, and they coordinate interventions in currency markets. They can do all kinds of things. Okay, just kind of be careful, because the dollar, it's just showing you that it's slowing down. I see every single rally, it's at a lower pace. The rate of change of ascent in the dollar is changing. And that's, we got to pay attention to that. Look at this. Look at the ARK ETF and the USD inverted. Okay? The USD is inverted, is in purple, is going lower, which means that actually is going higher. But look at what happens. I mean, they're going tick for tick almost with the ARK ETF, right? When the dollar goes up, ARK ETF goes down, and all these kind of, high flyers, high beta stocks are getting killed. But look at this. The dollar made a new low, a new high, okay? And ARK ETF did not sell lower. This is diverging from what the dollar does. These markets, they do not believe the dollar, okay? They do not believe the dollar. They do not believe this latest rally in the dollar. They're fading it. And this shows into these stocks, into these markets, and I'm going to show you something else soon. They do not believe this. They know that this dollar story is about to end, and they're positioning for a sell-off in the dollar. Take a look at the EM. The dollar is making new highs, 109, 110. Look at the emerging markets, flat. They're barely selling off. Why aren't they crashing if it's so bad with the dollar being so high? You tell me. Now, I don't know, but this is a pretty interesting signal out of here that these are not responding to the dollar rallying. Okay, so either they're kind of crazy and they don't know what's going on and they're going to crash later, or something is going to break here. Either this dollar is crashing lower, okay, either the dollar shoots higher and these things are crashing, the emerging markets. But I would tend to believe that it's the other way around. This guy is going to come down and these things are going to go up. Look at Bitcoin. Why is it staying above $20,000? Yeah, they tried to crash it a little bit below. Fake breakdown out of a triangle. I'll show you in a second. I talk about that with the guys in the pro room. And I said, listen, I don't know. It's a break out of a triangle. It's coming lower. This looks like a terminal move. Just kind of be careful. We're going to get a rally back up towards 21, 22K. I wake up this morning, this thing shot up to $1,000. Why is dollar at 110 and Bitcoin is not lower? Look at it. This is flat. All right? I mean, they're inverted correlated pretty much. Every time, I put in here in this kind of gray shaded areas as the dollar was rallying, what Bitcoin was doing. And it doesn't do that well when dollar is rallying. So right now, the dollar is kind of stalling up there and Bitcoin is not making new lows. So what do you think is going to happen to Bitcoin if the dollar comes down? I think it's going to go even higher. So just another thing on there that I think it's important. Now, I'm going to walk you a little bit through some of the comments I do in the pro room, and just kind of stay with me a little bit on here. I'm not plugging anything, nothing like that, but I just kind of want to tell you what we're doing there. Fear and greed index, 24. I think I put this on Twitter too. Fear index only at 24 for BTC. I put this, I don't know, it was a few days back. In my view, it shows nobody cares much if BTC continues to decline, almost like it's expected at this point. That's bullish. How could you have the fear and greed index sit at 24 with Bitcoin about to make new lows below 18K or whatever it was? It doesn't happen. It doesn't work like that, right? You're supposed to have that fear in the market to kind of feel it. And that should have been at about 10 or maybe even below 10. But no, it was sitting at 24. Okay, it says extreme fear, but it's not really. Which means that people were very complacent and, thinking, yeah, it's fine if it's going to break below. We're already expecting that. It kind of looks like it's going to break below, so who cares? We've dropped from 70 to 20. What's going to be another $5,000? Who's going to be hurt or whatever? Well, that's not a sentiment you got to have when you are at this level. So sure enough, you get a big rally. Back in here, I do these videos every day. This is shorter videos between 7 and 10 minutes, and I talk about Bitcoin and I explain daily updates every single day, what's going on with the price and kind of what I'm seeing, and I walk you through my thought process and, why this was a triangle, what happens with the terminal move out of a triangle, and then, all those levels and all that stuff. So, this is kind of what I do up in there. And then, look at this. This was I posted in the pro room about, this is institutions are paying record amounts for put protection. And this guy, Sentiment Trader, he put it up on Twitter too. But this is the most amount of money that these people spend on puts. I think since 2008 when Obama won, and then since 2016 Deutsche Bank crisis. These guys were spending 1.6 billion more on bearish bets than on bullish bets. Look at this line. As this market is, was, especially right now in the latest kind of sell-off. Protection. Huge amount spent for that. Conclusion, they're panicking. They're panicking. You take the other side. So, well, we'll see if they're going to be right. Maybe after we get a bit more of a rally, but listen, everybody's going to get their teeth kicked in. Because it's not that easy. in the markets. You know, everybody's going to get squeezed a little bit before the real moves kind of start. So anyway, this is kind of what we comment on there. And then Bitcoin, again, Bitcoin sell-off has stabilized at the larger supports from June. The breakout from the triangle suggests there was a terminal leg and a recovery should not be too far ahead. 19.5 will now become resistance, but if we get going, correction can take us towards 21 to 22K. So just simple basic stuff. You're breaking out of the triangle to the downside, you know, be very, very careful. You know, you don't have to get super bullish right away, but you can't really get bearish because, you know, that's a triangle and you're into support. So anyway, stuff like this I put up on there, and, you know, guys ask me questions. We kind of exchange back and forth, but these are both from Pro Room, from the chat room. And, you know, that's kind of what we're doing. So anyway, let's keep going. Crypto total market cap. This trend line continues to hold. I talked about this last week, you know, 2 weeks before, 3 weeks before, whenever we're doing this kind of macro updates. But this trend line is holding. It's pretty awesome. You know, we haven't climbed back above this blue one. So we're still in this kind of converging type price action, right? We're kind of squeezing towards. Eventually, we're going to get an explosion, either in Bitcoin, in total crypto market cap. Something is going to give in here. So I'm very, very curious. I like the reaction out of here. I'm going to watch this 1.17, 1.18 trillion to see if they're going to be able to climb back above those. Right now, we're, you know, right at about 1 trillion. But again, I mean, we got to think about this. If the dollar comes lower, if you're getting a push up in risk, what's going to happen to crypto? It's going to push higher. A lot of these altcoins are showing extremely well formed bases. Even if they have one more sell-off if they have, whatever, 20, 30, 40%, right? It's going to be the last one. It's going to be a very quick one, and then you're going to continue to recover. So I don't know. I think that it's pressing the short side on cryptos after they've been selling off since, you know, last year, some of them. I don't think it's a good bet. I think you're waiting in here and you're accumulating and you're positioning for the next bull run. That's kind of my thing on here. So unless, you know, Gary Gensler comes out and says, you know, this is all bullshit and, you know, they're all securities and nobody can own them and this and that and the other. But, you know, who knows, right? You never know in life. You're investing, you got to be prepared to lose some money. So I'm just telling you what I see on the charts. You know, I can't read the future, especially now what Gary Gensler is going to say. Now, 3 charts you got to see. You got to see this. Why? Because I think this is important for psychology, for Elliott Wave, for trading style, for everything. Natural gas. All the crazy stories about natural gas were coming as this market was just, you know, trying to break up. And they continued, actually, as natural gas was coming from these levels lower, you know, as natural gas was sitting right here at about $9, Putin shut down the Nord Stream pipeline. And natural gas did nothing, absolutely nothing, just continued to stay sideways. So we took a big short out of there with the members right there. You know, I'm like, man, this thing, it's probably going to crash because it looks like a head and shoulder. It's fine. It's coming lower. Now, I'm expecting this, maybe a little bit of a rally, maybe not that much. We'll see. But then I expect another big drop lower towards 650, 6, maybe even 5. So pay attention to this. Again, when you have a failed breakout, that's a big signal to get out of the market. If the market tries to make a new highs and it fails and it closes back below and it does a little bit of a nothing in there, you know, that's your signal to get out of the market. How do I know this? Because I was trading in 2008, 2009 when Euro went to 160 and I was in my first year of trading and I got my, you know, I'm not going to say in here, right? But you know, they caught me and I was like a deer in the, you know, in the headlights. Just frozen. I could not believe it that they're doing that to me. And I'm like, I probably top ticked that stupid market, you know, and it was a failed breakout above 160 on euro dollar. And I'm like, and they're crashing it lower. And I'm like, Jesus, what's going on here? What the, you know, I thought this thing is supposed to go up and it just continued to went lower and lower and lower. And finally I couldn't take it and I sold it. I probably sold it at the lows or whatever, but I remembered that and I said never again. And you know, you're seeing these moves in the markets to the downside and to the upside. Pull a line. And if they're not closing above it or below it, and if they're not continuing, it's a fake one and you got to get out of the way because this is reverse, it's sharp and it's moving into the other direction. So right now I'm waiting for the formation. That's a big neckline right in there. I'm waiting for this. And then I mean, look at the RSI too. You know, look how it was dropping and this market was making new highs. So anyway, I don't know if it's a fifth wave or not, and I don't care at the moment, but I'm looking for this market to have another leg lower. Okay, so that's one. I hope you learned something from this one. India 50. Just a pretty beautiful market. ABCW up in X, ABC down in Y for a second wave. 1, 2, 1, 2, 3, 4, 5. I don't know how many of you trade this. I don't trade it because I can't. I probably can do it via some ETFs. I know there's a lot of guys from India that watch my videos, so I thought I'd put that in there, but I think everybody can learn something. If this is an X wave, then obviously you're expecting lower, right? But what if it's not? If you're overtaking the top of this move up here, I think it's not. I think you're moving to new all-time highs in there. And it looks like that's a 1, 2, 1, 2, 3, 4, 5. This was a 4, beautiful 4. I talked about this in the pro room. As we were selling off, we had a B wave, and I said, I think we're going to go towards 38.2, 17.1, 17.160. We hit that 38.2 retracement. Then you're going higher. Now, this looks like a 3-wave move. This whole thing could still be a triangle. You know, don't be surprised if this turns into a triangle, into an A, B, C, D kind of sideways, and then you push higher. But what if it's not? What if that's a 1, 2, and you're pushing higher than a 3, 4, and 5, 8, you're making a 5th wave? I think this is coming. I think you're pushing higher than a 5th wave. Watch this trend line, and then obviously if you break below this 4th wave, all bets are off. You're not anymore in the structure. You're probably into something else. Probably it's going to be an X wave. But if you're continuing to press above 18K, I think you're moving higher towards 18.5, and maybe even attack these highs back in there. So there might be a pullback coming, right, after 5 waves are up, but again, just because you have 5 waves, just because you see 5 waves doesn't mean you have them. So pay attention to India 50. I think it's an awesome market, and it's got, you know, pretty good kind of trading. You know, it's got a nice trading style in here. It's got nice moves, very clear, much cleaner than the S&P 500. I love it. The next one, dollar yen, and again, I don't know how many of you trade currencies, but just from the perspective of Elliott wave and how this looks. Big impulse in a wave A, 2012 to 2015, 2016. Pushback down in a wave A, impulse down. Then a big sideways consolidation for 2016 to 2020. I mean, this is 4 or 5 years. The yen was doing nothing. It was just a yo-yo, going back and forth. It was driving everybody nuts. But look at this barrier triangle. If you don't know how it looks, this is how it looks, where wave B and wave D are at the similar levels. Happens on the upside, happens on the downside. Wave A in 3 waves, A, B, C, down in B, up in C, A, B, C, or WXY complex in a wave D, up in E. That completes a wave B. A, B, sharp drop in C of B. Wave A, wave B, now up in C. 1, 2, 1, 2, 1, 2. Why am I counting like this? Because that's the biggest move. That's the third of a third of a third. 1, you can see in here, 1, 2, 3, 4, 5 for third, down in fourth, up in 5, which I think is probably done. That means that we're going to get a big crash in a 4th wave, or maybe sideways, then another push, maybe another 4 and another 5. Maybe not. But I think yen here is telling you it's screaming possibly for a short. Okay, those markets, I mean, people were starting to, you know, have all kind of comments that the yen is, you know, crashing, and it's, you know, doing this, that, and the other, and you know, just when everybody was super bearish, because I was watching them on Thursday, all the commentary regarding the yen as he was kind of plunging, and I'm like, man, this thing is just running out of steam in here, and it had a pretty good drop. I think 100 pips or 150 pips so far, but I think there's more to go, and I'm probably going to trade this yen to the downside as a 4th wave, and then we'll see what happens. But I mean, I'm looking at the RSI. Look at this thing. It's screaming for a short. So just be careful. There might be, in this 5th wave, there might be a couple of legs higher, very small, but I think this is going to be one big trade that's coming crashing down. And, you know, you hear comments out of Bank of Japan. They don't like the currency, and they're saying that all the time. But, you know, you never know when these things kind of step in. And it's because of their, you know, yield curve control and all that. I don't want to get into all of that. But I think yen is due for, you know, for a little bit of a rally. And especially if dollar sells off. This is dollar-yen pair, right? Dollar down, yen up. Yen up, euro up, maybe pound up. I think there is a time for these other currencies to win a little bit. Remember, sometimes we win, sometimes they win. So everybody's got to have a turn. And with that, guys, I thank you all for watching. I appreciate you subscribing. I think we're reaching 5,000 pretty quickly. I'm thinking we're about 4,800. Thank you for being a part of this journey. You know, apologize for throwing some, you know, some stuff back and forth up there. Hope I didn't, you know, offend anybody in any way. But listen, if you're a bear, you got to take it. If you're a bull, you got to take it. You know, we all kind of take turns in here, and the markets are the truth and the price. All right, I'll leave it at that, and I'll talk to you later. Bye-bye.